Hi there, it's December 19th, 2011. It's just after 1 o'clock, so 1 a.m. Um, Pre-market on London session, and so liquidity should be picking up briefly here. Kind of want to put together a game plan looking forward for, um, specifically today, but a little bit about what I'm expecting in the coming week, um, and just put together some ground rules and just areas of interest where I'll be trading. So. Um, I haven't had too much time to really put everything together, but there's enough information on this chart to really, to dive in and have a good idea of what's going on. So you can see last week this was my line in the sand right here. We broke through it briefly, and then prices collapsed. After that, you can see we came back to retest. Let's see if we can get rid of some of these excess lines, that channel. Great. So we actually came back to retest this level through here. You can see a little bit lower here. Price, broke higher, broke through this level, came back to retest the supply zone, and then went back to the next level of support. We bounced off of that, and then at the open here, we had a nice push lower to the next level of support, and as you can see, we're bouncing back up into resistance. So one thing to really notice here on the hourly is that we had this, this bigger bar, and we're getting, this correction, but really the momentum of the correction is not, the best here, right? It's not fully correcting this bar, and it's been 4 hours already. So again, this is the 1 hour chart. So for that reason by itself, I do think we have some lower prices in store. If we take a brief look at the daily chart, you can sort of see what's going on here. We have this massive leg down. We broke support here. So a couple things to really expect. One, if this market is very weak, what we'll see is sideways consolidation and then continuation down. And then the other option would be a retracement to this level where we have this level of resistance, and also we have this trend line coming down, right? And that would be a short as well. So those are the two most likely scenarios at this point. Again, notice both of them are to the short side. If we push any higher than that, we break this level as well, this 132, 132.2 level. Perhaps we see a correction higher, but the sentiment at the moment is fairly bearish, right? 4 hour chart tells the same picture here. You can see this bar right here came down quite a bit, closed below this structure here, showing us that the bears are clearly in control. And then on this bar, we haven't seen any continuation yet, just a pullback. So again, like this is the 4 hour. If we drop it back to an hourly chart, so it'd be the 1 hour chart, you can see that the momentum to the upside is very limited. So what does it leave us with? Well, we have to discuss what we're going to take our entries on the 15-minute and perhaps on the 5-minute. So we should be able to define our entries in the 5-minute, 15 and 5-minute are telling us the same thing, really. You can see your momentum to the downside, accelerator move to the upside is kind of a grind higher. These are the levels I have marked off. So the next level of interest would be the 30-20 roughly level. If we see some sort of a reversal form there, that might be indicative of a move lower. Beyond that, coming back to this area up here, roughly the 30-40s, and then any higher than that, I would question my analysis because we would have regained 100% retracement of the. Let's move back to an hourly chart. This one right here, we would regain 100% retracement of this entire leg down, and that would be troublesome. Even regaining 100% of this leg or this candle might cause some concern, but again, you can see the 4 hour is clearly in our favor. So if we retrace the whole 4 hour candle, at that point I would sit on my hands and say, okay, we need to wait for more information to decide what the market is going to do, really. So for now, really just kind of sitting tight, watching this thing, and looking for some sort of weakness through here, which we haven't seen just yet. Now, the interesting thing here, notice, is that, well, rather, the targets that come into play here, because we are at lows here, any sort of drop down would really, we'd have to go further back on a larger time frame to find the target. So if we go to the hourly chart again, and we look at the daily, you can see that we are at a pretty significant level of support. So this is breached, then the next real level is down here, which is a few hundred pips away. But because we are taking near-term entry, it's probably best just to target the low swing point here, where we potentially find some support. Now this level right here, actually, one more thing I want to point out, is it comes off a trend line. So if you take this trend line from this swing point to this swing point, that very cleanly comes through on that side. And so I think that might be a good place to look for targets. So assuming price did collapse assuming price that comes up right here, we have roughly 10, 12 pip stop, and our target is most likely going to be between 30 and 40 pips. So that would give us a pretty decent 3-to-1 reward to risk ratio, which makes for an okay trade. And if we look at the news tonight, let's see what we get over there. So look at the calendar, and you can see that there's not too much going on until 9:30 a.m. when we have the ECB president speaking. But other than that, it's going to be pretty clean for the overnight session. So at this point, it's just a waiting game. We have our plan in place. We know the trend, the near-term trend, has been to the downside since the mid-16th. So until we can breach this swing point right here and go ahead and mark that off, we are going to consider this. Let's see. It's not right. We're going to consider this move a corrective move, and then obviously we want to trade the impulsive move, which we're waiting for. All right. So thanks for watching, and good luck.